What's going on, guys? Brian's here. Today is Monday, July 22nd, 2024. Now, today's price action was simple enough. It was actually what I think some of us would have expected following the price action that occurred last week. If you're new to the YouTube channel, subscribe and check out some of the previous videos in which I've released. These few videos here have recapped the daily price action. And in this video right here, I expressed some thoughts that I had for the upcoming week. One of the scenarios actually played out. So I took a trade here earlier today, right about here. Hopefully some of you guys were able to capitalize on this opportunity. Long and behold, the market did what was expected, something that was expressed in that previous video, but we had our 50% retracement. So as I mentioned, I think I was referring to the ES, and I mentioned a scenario in which I wouldn't be surprised if the market was to pop, put in a 50% retracement, and then head higher. So we ended up getting a scenario in which most of us would have been prepared for, especially if you saw the previous videos. This is the type of price action I've seen happen so many times, especially whenever the market sells off. The bounce usually gets a quick retracement. It happens sometimes in the after hours session. So in this case here, we were lucky enough that it happened while the market was actually open. For some of us that don't trade futures or don't trade the after hours sessions. On my chart are my usual weekly gamma exposure levels. So if you're not in Quant Trading app, you guys can see these are the levels that I like to share to the Quant Trading app members. Anyone within QTA has access to the levels themselves. They can pull up the gamma exposure profile, they can mark the levels, but I share them at the start of the week, just showcasing the levels that I have marked off that are pretty significant. But you guys here on YouTube now can see what I'm thinking for this week here. The red levels are the negative gamma strike, the green levels are some positive gamma strikes. We have our G flip strike. So this is the area in which the market has its overall net gamma going from a negative to a positive. So price action we can expect to be different up here versus the way we can expect price action to trade below here. I like to mark off sometimes whenever I look at the gamma profile an area in which I would expect price action to be pretty sticky. Sticky can sometimes mean where I'll expect price action to be pretty choppy, or where I can imagine the market pinning at if I'm thinking about running some sort of a iron butterfly. That aside, let's just focus in on price action. It was a very simple and quick day here for me. Again, largely because the scenario played out exactly in the way I was expecting it to. On the daily time frame in the previous videos, we took a look at the channel on the NASDAQ, and we know where price action is in relation to that pullback. We had a nice deep retracement, so it's not magic or it's not some sort of crystal ball. Anyone that's been trading long enough knows to expect some sort of a relief bounce. The question or the challenge that can come, even if things are simple, is where do you enter your trade? And that's where I like to look for Confluence. So we're looking at a pretty clean chart. The only thing on this chart right now are the gamma exposure levels that I mapped out manually based on the gamma exposure profile. So this is our clean chart. What I want to do now is turn on the Quant Trading app script. So what we have is our weekly and our intraday script. Let's turn off the weekly script for now and just pay attention to the intraday chart. So this script is plotting the QTA intraday zones. So these are levels that are plotted as soon as the market opens. They're all plotted on the chart automatically. Again, if I turn off my studies and I turn them back on, you guys can see everything on the chart now is being plotted from the study. What's non-proprietary is this VWAP, so this is this gray level on the chart. And I'm sorry if you're not new to this channel and you have to hear me say this a million times, but I never know who's new to the YouTube channel that might not know what any of these levels are on the chart. The dash blue level is max pain, and this is the max pain for the weekly expiration. So this upcoming Friday, you guys already know at this point, the max pain strike is a significant strike as it can act as a strong support or resistance level, especially when it lines up with another key area on our chart. This is the Quant Trading app intraday zone up here, the upper level, and this is the lower level. Look what we have. Price retraces back to our intraday zone. We bounce, we go up to the intraday zone up here. So from zone to zone, I like to call this a coast to coast. The SPY ends up struggling at the 555 strike, which is the max pain strike for Friday's expiration. This is a 15-minute chart in which we're looking at. Now, why would I enter this trade here? Let's just zoom out and take a look at context. We started off with, we had a 50% retracement. We had the intraday zone right here. Here is our 2-day anchored VWAP. I've done umpteen amount of videos regarding a downtrend, then price gapping up, and then it retracing to the 2-day anchored VWAP. Same thing works in reverse. If the market has been going up and then it gaps down, if it retraces to that 2-day anchored VWAP, there you go. You have a setup to potentially look for a short trade with a stop over the higher day. If I'm going long here, my stop can sometimes be below the previous day's low if I'm looking for a larger move. If I'm looking for a scalp trade, just back up to VWAP, then obviously I would need some sort of a tighter stop loss. It might be if the 2-day anchored VWAP is breached and not reclaimed within a 5 to 15 minute period. In this case here, it was simple enough. We got rewarded. We got a candle that I'd love to see, hammer candle right here. We see buyers are stepping up, buyers are getting aggressive. We see the price is not even spending that much time in the zone. That's the type of price action you want to see. You don't want to see price come down to the level and then hang out around the level, dip below, hang out around the level a little bit more, maybe pop, come back up to the level. That can be very mentally exhausting. You see price get to a level and then immediately bounce off the level. That's exciting. Then take some time, see what it's doing in the next candle, and then it's proving itself. Now we can start looking for some sort of additional confluences. If we zoom out and look at things from a grander scope, I've mentioned the ADD and the tick. What do we have right here? Market early in the morning is here, then later in the day it comes back to here. This is the SPY. By the way, these are both the SPY. This is just a 3-minute time frame, and this is the 15-minute time frame. So here and here, SPY is at the same place. What do we have on the ADD? This is early in the morning. The ADD retraces to the 0 strike, and then it bounces. And then when the SPY comes back down to the low of day, the ADD is all the way up here. So that is bullish divergence from an ADD standpoint. This is the ADD early in the morning, so this is 10 a.m. Eastern time, and then at 11 a.m. Eastern time, the ADD is all the way up here, or 10 or 11:30 or so. If we head to the SPY, let's maximize this. At 10 a.m., where's the SPY? It's down here, and then at 11:30, we see that the SPY is back here. So at 11:30, SPY is here. 10 a.m., the SPY is here, Eastern time. If we go to the ADD and we compare that, where's the ADD at 10 a.m.? It's all the way down here. Then at 11:30, 11:45, where's the ADD up here? So the ADD is up, SPY's down. Why is the ADD all the way up here? The ADD should have at least come back down to at least the 0 level, but it did not. It held up. So let's zoom out, find our additional confluences. What are the futures doing at that time? Let's maximize this, make it a little clearer. Futures retraces down to the 2-day anchored VWAP. This is right around 11:30 a.m. Eastern time. So the futures, what do they do? First of all, we gap up overnight. So this is the Sunday night session here, the open of the Sunday night session. Market retraces. Where do we retrace? We retrace about a 50% retracement. So let's actually just clear all of our studies. And let's see. So from here to here, we already have a winning setup right here. Market then takes off. It opens up right here at that extension. What do we have? Let's remove this. So now from the low here, from the overnight session up to here, market comes right into this pocket that's often referred to as the golden pocket. It's the 50 to 61% retracement zone. Golden pocket, whatever you call it. The way I see it, it's a 50% retracement. It just means price is at a discount from where it was earlier in the day. So we have Confluence. We know the zones that are beneath us. It was addressed in the video over the weekend for the upcoming week. So these zones, you should have some sort of awareness. They come straight from the volume profile. Let's turn this back on. That's what we have on our chart right here. High volume nodes. We have a POC down here. Price bounced immediately off of it. That is a great sign. We have a strong POC up here. I took the trade on the futures. I grabbed the 6:30 call. If I just were to pull this up for a second here, if you guys are interested, you guys can see. So right around here, just about 11:40 a.m. Eastern time here until 1:18. It wasn't a lot of volume traded on this contract. I went with the Wednesday expiration. It was a quick trade. I only wanted one trade for today. Things are very busy for me right now outside of the market. So I just need things that are simple enough, won't stress me out. Contract for 7 something, sell it for 13 something. That's the trade essentially right here. The 6:30 for Wednesday. I didn't want to deal with 0 DTE. At the time, I wasn't sure if I was going to swing the trade. If you are below PDT, I would highly recommend trying to gain access to trade futures options. You can day trade them. It's a great way to bypass the PDT rule. I went with that contract because it's a high positive gamma node. That's what this green level is telling me from. It's from the quant trading app intraday script. I also went with that level because if we go to the SPY and we maximize this, zoom out for a second, turn back on our gamma exposure levels. If I remember correctly, at the time I was looking at the G flip strike, and I think a loose translation of 557 on the SPY ended up being 5630 on the ES. Simple enough, just targeting this area. Keep it simple, guys. Market's here. I think we're going to head up here. I'm going to get that call there for the Wednesday expiration. Don't want to deal with the 0 DTE. 1 DTE would have been fine, but I prefer to have a little less exposure to theta. I decided not to swing the trade. As I was rewarded, price went straight up to the high of day. I took profit right around here. So just as we're approaching the high of day and rejecting it, didn't want to get greedy. I think I only left $1 or $2 on the contract left on the table. So I'm very happy with this trade. And for me, for a day trade, I think this is exactly what you want to be capitalizing off of. If the total move is from here to here and you take profit around here, That's well over 65% of the move. You caught more than half of the move. If you could get up to about 70% of a move, to me, that is a major win from a day trade. So I'm very happy. If I was still actively journaling this trade, I would consider it an A+ trade. The opportunity was there, the setup was there, the execution was there, the risk was there, the reward was there, the preparation was there, as if we were prepared from over the weekend. The confluence was there. If we were to look at all the confluences on this dashboard, we have the 2-day anchored VWAP right here on the ES. We have the 2-day anchored VWAP acting as additional supports right below the quant trading app intraday zone right here. We have the divergence in the ADD. Technology was very strong today. And the VIX was declining. That's something that was addressed multiple times in the previous videos over the past few days. If I'm going to be long, I want to see a decline in the VIX. The VIX started today here, and then later in the day, it was down there. That's going to add some extra confluences. As I see the proxy for implied volatility decreasing, that is a good sign for anyone looking to be long. So VIX declining is an additional confluence. There was some additional confluence on the NASDAQ, so let's just pull that up very quickly. Keep this very short and sweet. Similar situation, break, retrace. Where do we retrace to? 2-day anchor VWAP, intraday zones also there to add as extra confluence. NASDAQ ends up rallying. We love to see this type of price action. It just adds more confidence whenever the Qs and the SPY are showing the same thing. So just wanted to keep the tech pretty brief as we continue our focus on the SPY. To wrap things up, let's just take a look at some additional confluences in the quant trading app data feed from the SPX trade engine. This is loosely right around the time in which I was taking the trade. We have max pain 540. You guys know at this point, significant strike. It's lining up with the absolute gamma. So 540, lining up. Support was holding early in the day. It's broken. And at this point, I'm looking at this and seeing what the expected move is for the day is around 22 points. According to this SPX chart, there's not any major support in the area here. However, I'm looking at the positive GEX. It's above 50%. We're around 64%. I'm seeing strength. This is proprietary to quant trading app. It's above 50. I'm pretty comfortable with that there. Let's take a look at some gamma here. Seeing high volume nodes right here. So my expectation was already surprising that 540 broke. That actually did catch me by surprise, which is one of the advantages of being patient. I think I could have bought at 540, but knowing where the quant trading app intraday levels were, I would much rather wait for price to get down to these zones, as I'm more comfortable buying around these levels, especially when the 2-day anchored VWAP is there. And price action was not giving a clear reason to be long yet. It wasn't until buyers started stepping up around here that would make me as a buyer more confident. So as we take a look at this did surprise me, as I did not expect price to break down below this zone, but I was just patiently waiting to see where the buyer is actually going to start showing up. I'm not going to buy on this aggressive breach of a key strike that I did not think we would go below. However, I know this is the 50% retracement area. I know that's where the intraday zone was. I know the 2-day anchored VWAP is in that area. So I was more than willing to wait to see what would happen. So we continue right along. We can see buyers start showing up right here. And this is where we get our double rejection of this level. So we see these 2 hammer candles forming. What is our gamma looking like? We know we have a lot of positive gamma up here. We can see that there's a lot of call participation all the way up here. Volume's pretty decent for these higher strike prices. So I decided to take the risk and go long below here. Any one of you guys, I hope, were able to capitalize on that trade. We could just zoom all the way down to the end so you guys see how things played out. The power strike was still attached to 500, but it ended up snapping back above this around 1245, and it started becoming attracted to 560. You guys can see at this point it ended up holding 560, so this ends up acting as some sort of support now. Once price broke, it ended up holding the level. Absolute gamma was still below here, so this isn't something for a later in the afternoon trade that I would have considered any type of A+ setup. I think the trade was really from here up to here, and that's why it was the only trade for me for today. Just wanted to showcase you guys, because I know I've shared complicated videos on this channel regarding some advanced spreads and very technical non-directional spreads. I do trade a lot of those, but I'm also showcasing that sometimes a really good trade is just buying a few calls, buying a few puts, closing them when you hit a target, keeping it simple. I'm also pushing myself because, again, general elections is coming up and I want to be trading a lot more directional. I think that's going to be the better opportunities versus trading spreads. So I'm doing my best to snap back to my playbook from 2020, 2021 or so, before I started trading a lot more complex orders. If you're enjoying these recaps regarding price action, let me know in the comments down below. I will continue to do them, especially if there's decent engagement from you guys. Like the video, share it, leave a comment if you learned something. Thanks for watching, and I'll catch you in the next one.